Well, that's of course the management of Infosys as part of the press conference post the Q3 numbers. But when you're looking at the numbers overall, they look like an okay set. 45,500 crore in terms of the top line number. And it was expected to be in around that 45,000 crore mark. So that's something you want to keep on your radar. In terms of the estimate for EBIT, that was expected at around 9,550 odd crore. So it's come in slightly shy of estimates in the sense the EBIT has come in slightly shy, and therefore what you've seen is some contraction on the EBIT margin count. That 20.8 number, if I were to just pull one more decimal forward, it's around 20.84. So the drop with regard to that EBIT margin number is just about 18 basis points when you're looking at it. So that's one thing you want to keep note of. But versus the estimate, actually EBIT margins were expected to go up to 21.14%. So it's come down slightly in comparison to what estimates were. So the EBIT margin numbers are slightly on the softer side. Profit after tax impacted by the 1,289 crore one-time knock that was seen as part of the new labor code implementation, and that's really a bit of is where the miss, if at all one can call it that, is coming from. But technically speaking, it's not a miss because overall it looks like an inline set. In fact, what the company has done is it's hiked its guidance for FY26. It's hiked it from the 1 to 2% kind of growth number to 3 to 3.5% kind of growth number. So that's the one big positive that is coming out from the numbers that have come through. In fact, I stand corrected. The revenue growth earlier, the guidance was 2 to 3% constant currency. It's been bumped up by around 50 bips or thereabouts on the higher end. So it's now 3 to 3.5% on constant currency terms. 2 to 3% earlier, now 3 to 3.5%. So that's the possible positive, if at all I can call it that. Aditya Shah, founder Hercules Advisors, joining us to try and evaluate these numbers for us. Aditya, how are you viewing the numbers? That's point number one. What do you make of the uptick with regard to the revenue guidance, constant currency, of course, for FY26 full year?
Good evening, Harsh.
Good evening.
I believe that the numbers are okay. There's nothing to complain about as such. I believe TCS numbers were a tad bit better than Infosys numbers, but the guidance revision upwards is a little bit of a positive. But net, as I've been saying on the IT numbers, on the downside, there's nothing in the IT numbers to suggest that more pain is left. Now, everything depends on how the trade deal really moves on from here to lift the sentiment per se on the IT stocks. So from my perspective, a steady kind of a result with no upside or downside to the numbers. The upside, the little bit of upside being that the guidance has been revised a little bit upward, but still not a huge positive. Also, the hiring numbers are a tad bit more positive than what TCS's numbers were. So those are the two real positives from the numbers.
5,000 employees added, Aditya, and that's obviously one way to look at the direction the IT industry is taking, because TCS, there's been a consistent lowering of headcount, while Infosys, we've actually seen a bump up. So what do you make of this? Is there just more confidence? Is this what it demonstrates, that Infosys is willing to grow at a faster clip and therefore willing to hire? Or you wouldn't read too much into it?
So I will not read too much into it.
Okay.
It can be quarterly basis as how the order inflows happen. But broadly, our addition of 5,000 employees is not something that is really big that points out to a bigger growth coming forward. What this does really say is that the pressure on the company is not as much as there is on TCS from that perspective. However, from margins perspective, TCS may have taken a call that it wanted to give away some deals so that it is able to control the margins. So in my opinion, both companies have different strategies. But net, pain seems to be over in terms of the downside. Now it matters how the sector really moves, how the deal moves forward, and from there on we will take a call.
Aditya, if one were to try and understand the margin picture, I know that the margins in the 20 to 22% band, it's a very, very wide band that Infosys has given. But would you at all be worried with regard to the margin decline we've seen? It's just been 18 bips of decline, but would that at all bother you?
I remember we had a call on TCS as well, from 25 to 25.2% here, about 18 bits drop in margins. So margin can move in a band of 1 or 2%. I am not too much worried. The company is confident of maintaining the margins. So from my perspective, I'm not too much worried. The margin movement here and there or a quarter or two is part and parcel of life, and sometimes management do not have control on margins in the shorter term. So from my perspective, the band is okay. It will move there. So nothing to get worried about as such on the market.
Rate the numbers, Aditya. You had first off TCS, thereafter HCL Tech, and now Infosys. How would you rate them?
So numbers and the stock price movement, I think TCS and HCL Tech would be at the top. Given the HCL Tech dividend yield is also stronger than both of these companies, HCL Tech and TCS would be my top picks, followed by Infosys. I'm very bullish on the large cap IT sector. Valuations have come down to about 20 to 25 times multiple, given which company are you looking for. And I think this is a broad sense of a bottom where this is a process of bottom formation, and from here on the stock prices will move. But investors who are only long-term investors with 3 to 5 years of time horizon should look at these stocks. I don't think in the shorter term any of these companies would generate any significant amount of return. It is contingent on a lot of external factors which is beyond the control of any of these companies.
Okay. How would you play IT, Aditya Shah, at this point? Would you play through the large cap IT, mid, small, ER&D, and within large cap, what are your favorite picks?
So, as I said, large cap IT, given the valuation comfort that I have got on the large cap IT side, we don't have that kind of a comfort on the mid cap IT side. So, from my perspective, large cap IT continues to be the top pick. As I said, HCL Tech and TCS are the top ones, and then comes Infosys.
Okay. Aditya, thank you so much for joining us.